here only cryptocurrency fear and greed index. You can find right at your left fear and greed index from 11th of January 2021. However, on the right side you will find the updated one right exactly 1 year ago, and that has been noted today. And in both cases we have registered the price at those dates as Bitcoin was hitting 40k USD. In both cases, however, whether it's January 11th of 2021 or today, those prices has met with different sentiments. Let's have a look at those back 1 year ago. There was extreme greed. And let's have a look at today's. There is extreme fear. Will this extreme fear, when yesterday we were hitting 39.6 thousand USD, could turn into a positivity, at least in the upcoming weeks? That's one of the topics we'll be talking about. So today we'll be talking about cryptocurrencies, also stock markets, about trade ideas, and also most important topics that moves the market the most. So it's another episode of Blockrevision. Thank you very much for watching, and let's begin. Okay, so we are starting up with economy view section, and right here we have one of the topics that is hitting up the market the most. That is Omicron. Right on the Bloomberg, we can find that Omicron absenteeism poses fresh test to U.S. economic strength. And as we could find recently, China locked down 5 million people living in the city of Anyang after just 2 cases being reported right after that. However, in Hong Kong, reportedly China has banned passengers from designated high-risk countries from transiting through its airport. So it's quite of a paralyzed right over there, and it means that there are much of an anxiety regarding this topic. On the other hand, we can find that there is a quite of an problematic issue regarding how fast the variant spreads. We still don't find any specific problems regarding the possible forecasts. So the forecast showing us that regarding whether it's bull, base or bear case, we are just about to hit the top. And recently even we have found quite of an optimistic curve regarding this variant, where Dr. Emrani has heavily criticized recently predictions that Omicron will soon largely disappear, morphing into mild seasonal virus, and we can also find that some of the more prestigious institutes such as Health Metrics and Evaluation recently has confirmed this. So we could expect this Omicron variant to stay for a bit longer, for the especially winter season at most, and right after this we could expect COVID to have its largely non-existent phase right within a few months. So COVID might be in return, but we have, as we have told about it recently, there might be some other variants that also may turn up in the nearest future. So Omicron may have its the worst days behind. However, we still have some possible anxiety to be faced with. So, heading further with possibility of having a COVID return from the economy, we can find that the return of US 10-year yield is right now heading back to 2%, the levels that haven't been seen mid 2019, and we can expect that there will be a few increases of an interest rates on this year, and what Fed also announces, there will be 4 increases of at least 25 basis points. JP Morgan, however, Jamie Dimon, CEO of JP Morgan, says they as a bank expect Fed to increase interest rates even higher, and at least have its hikes in a greater amount than just 4, as 25 basis points even hiked 4 times is very little amount, and it will be very easy for the economy to absorb. Nevertheless, Fed also having its viewpoint that the labor market is quite getting tight, and as we could find, it will be rather impossible, rather very improbable to hold off on the first hike until June, and it would be rather by March of 2022. That's why also either it's USD or US 10-year yield right getting in power recently. That's why obviously Nasdaq is having its bad days right now. There's a massive meltdown in Nasdaq stocks, as we can find. We just have been hit the quite relatively high percentage of stocks, down 50% from 52-week high, and we are right now already in the top 13% of all days since 1999. And also the TIP, the iShares Tips Bond ETF, showing up that we are expecting with this serious interest rate hikes announcements, we are expecting inflation to slow down, and that's why a lot of investors that were betting on TIP right now is trying to at least save their positions and cut the possible risk. So won't we see higher inflation from here? At least for now, because this sell-off that been seen recent week was quite of a strong. This relative strength of this candle showing us that right now we would find rather a possible correction of this move than another wave to the local highs being set on November and previously on July. So it might be something that may stop inflation in the 2022. However, it doesn't mean it still won't go higher, at least in the coming months, as we just need to bear in mind that the market just outrun the real economy. So we are in this environment of falling US jobless rate and rising wages that illustrates tight labor market. That's quite of a great environment to start thinking of hiking interest rates. However, if we just have a look at major indexes, for instance SPY or DJI. Just have a look at SPX at first. Right now we are strictly holding a relative power of an index and holding this 50 EMA average line. So also, as we could see at insiders move right now, we are falling below 12 to 1 readings on insider transactions ratio. It means that insiders are taking advantage of the recent slide and trying to buy those dips. Also, if we have a look at recent tendency, we could find that those dips has also been bought during this December's fall. So whether it's December, whether or January, it shows us that there's still nothing to be worried about. Those indexes are still trying to be pushed higher, and with this I would expect other indexes, as for instance Nasdaq, to hold its power. Also, that's something that also is worth consideration. Right now, let's have a look at ECB balance sheet, and it's also starting to trim its assets. Tighter policy affects not only interest rates, as we can find, but the equity risk premium as the Fed withdraws funds from the capital markets. So right now, those markets that are suffering the most are unprofitable tech, meme stocks, cryptocurrencies, and disproportionately affect relative to the rest of the market, since those investments are approximately twice as volatile as the overall market. So right now we are in this risk of environment, and also ECB expects to maintain its tendency, and going further into 2023 it would start to decrease its balance sheet and finally hike its interest rates. And right now we are heading to crypto outlook, and we can find that recently crypto asset flows has suffered with outflows. Something that we could find right here, we haven't seen such an outflow since the half of 2020. It means that it might be worrisome to some investors that are betting for cryptocurrency to rise during this year. Those outflows may be something that may differentiate from what it was when Bitcoin has dived into those 30k levels, when we haven't seen such an outflow right over there. So right now we can find that the sentiment around Bitcoin is getting worse than it was back then, even if we are higher in terms of prices. So that's something that we need to ponder about when it comes to consideration of our participation in the market. Something that also will be struggling in 2022 are the regulation on cryptocurrency market. Right now, crypto firms gear up for battles over new rules in Washington, and as we can find, as soon as this month, the Treasury Department is expected to begin clarifying which firms will need to report user information under the infrastructure bill. So there's a quite important time in order to huge anticipation in order to what Federal Reserve will say about this sector and which companies will be forced to specific roles and also specific acts. So right now we are in this hesitation period where those cryptocurrencies may suffer a bit. As we know, the market hates hesitation, hates anxiety. On the other hand, to not see everything in a doom and gloom colors, we can find that JP Morgan sees more crypto adoption in 2022 and debates Bitcoin's status as store of value. And as we can find, JP Morgan sees this year as a potential to be the year of the blockchain bridge or the year of financial tokenization. Particularly well designed, so Bitcoin regarding to JP Morgan is particularly well designed as a modern store of value, and the strong design has contributed to the increased confidence in and value of Bitcoin. It means there is still a huge chance to see cryptocurrency market to increase its adoption among institutions during this year. So maybe it would not be a year of retail, but more of an institution. So I would expect Bitcoin and other alternative cryptocurrencies to maybe not have a bear tendency during this year, but rather to have its momentum maintained. So Bitcoin should stay in an uptrend. However, other altcoins may have suffered a bit, but should still ride a wave of a positive sentiment that will be run by institutions. So that's definitely a positive green light, I would say, green light in this tunnel that we have entered recently when those downturn trend has started. Also, the sentiment around Ethereum is getting bigger and better, even if those dip has recently extended. We could find that on Ethereum recently, non-exchange whale addresses has ballooned, as we can find right here on a purple line, and on the other hand, top 10 exchange address holdings has decreased its deposits. But I wouldn't really trust those shady exchanges where they are probably just rebalancing their portfolios. I would trust those biggest holders that are more well informed regarding where Ethereum infrastructures is heading, rather than listening to what exchanges are doing. So it's something that also standing in favor of the growth of this sector in the coming months. Also, an open interest on cryptocurrency market is also showing us that we have also overtaken those local highs of November and December. So it means that there is lots of money on the sideline that is entering the market right around those 40k levels. Okay, so in the end, we are heading right to the trade idea section. We are skipping market movers as there are no very important issues that are ongoing right now. So on trade idea, I have a proposition for you to trade US 100 right now, as we are right after this false breakdown that been noted yesterday, and we have very firmly defended those levels on a high volume. So right now I do expect US 100 to move to those levels of local highs been set at around 16.72 and with a stop loss been set right below this bearish candle wicks, right at 15.47. We have a risk reward ratio 5 to 0.01, so it's quite a decent trade to be made. Right now we have quite of a strong demand candle that is showing us relative strength of an index, and this area should be defended. I do, however, expect US 100 to correct back below to levels of 15.66, or at least to higher bound of this trade area of 15.72. So if the market will reverse and enter this area of a trade, there might be a very good opportunity to start a position on US 100. US 100 search should also coincide with SPY rebounding and also DJY, so it's quite a decent move in order to make. Right now we are we haven't still closed a daily candle, so still need to be cautious, but with a proper risk management, it's quite a decent bet to take. And in this view you have strict levels that I've been talking about if you haven't watched the numbers recently. So yeah, that should clarify my viewpoint. And that's it for today's episode. Thank you very much for watching and see you tomorrow.